Did you recently buy an asset and you traded in another one and you're wondering, how do you enter that into QuickBooks? You are in the right place. Hi, I'm Candus Kampfer and I love to help business owners and bookkeepers create confidence with QuickBooks. Are you ready to dive into how to enter this in to QuickBooks? Now, this video is for desktop users. If you are an online user of QuickBooks, go up above or down below and we will link the other video for you. All right, so let's dive in. I'm going to share with you how I outlined it first on a document so that I have all the details, and I'll show you how to do it actually inside of QuickBooks. So let's start here with what is the details that we need to get together. I like to outline it on a document or something like this just so that it makes it so much easier. I have both a Google Doc and a Google Sheet that I put it together on. So first, when you're looking over here, you're going to see you need to get together what was the cost, the total purchase. Now, quick disclaimer, I am not a tax professional. I cannot give you tax advice, but I'm going to do my best to give you the data points you need, how to do it in QuickBooks. But I will say that you're probably going to need to reach out to your tax professional for a few details that you need to decide on. And I'm going to tell you what those ones are. Okay. So first, get together what was the total cost of the new purchase. This is a Ford that was purchased in this example. This example actually came from one of our Confidence QuickBooks alumni, and I thought I would share it here with you as well. So that's where these data points come from. So first, you're going to want to make sure you know the value of the asset that you're purchasing, the total cost. Next, you're going to want to know the allowance. This is going to come from your dealership that you traded it in. In this example, they're purchasing a Ford and selling a Ram. I don't know all the data points on everything they bought, but we're just summarizing the facts that they did give me. The next thing that you know is that they had a loan and they added a little bit of interest. So this is the total amount to pay off the loan. So the way this works is your trade-in value or your equity is what was the amount that they gave you for the trade-in. What's it going to cost you to pay off your loan? That's where this math comes from. We'll use it later. If you actually put money in for a down payment, you're going to need to add that in. In this example, they didn't have that because they used a vehicle as the trade-in. You may, and this is where you're going to want to talk with your tax professional, if you have taxes and other fees, they may want to expense it. So this is a big tip that a lot of people don't know. When you buy an asset, you do what's in accounting called capitalize it. You put it as a fixed asset. And then over the life of that vehicle, depending on how you want to depreciate it, another great thing you'd want to talk to your tax professional about. I will tell you if you need a how-to tutorial for depreciation, you can go up above or down below. We'll also link that for you. So we're going to be depreciating the asset if we put it in as a fixed asset or capitalize it. So it's something you're going to need to know. So when you're deciding if you're going to capitalize or not, one of the facts you may be deciding, do I want to write off the fees right now and expense them this year, or do I want to add them to the total cost of the vehicle? It depends on how you're depreciating it. All right. So let's jump back over and look at this. When you're in the original purchase, so now we're talking about this was what do we do with purchasing? That's all this section. Now we're going to go back and say, okay, that Ram, how are we going to remove that out of QuickBooks? Because we sold it, we traded it in, we don't need it in QuickBooks any longer. So first we find out what was the total value we have in QuickBooks minus what we've been depreciating on that asset. And that gives us what's called a book value for the Ram. Then down here, you're going to take another piece of the puzzle is what was the trade-in allowance minus that book value that we just got here, pops it right there, subtract that out. And that gives you typically what's a gain or loss on an asset. Now I want to give you another little tip that you're going to want to talk to your tax professional about. Typically, if you're just buying one asset and then selling it, you either have a gain, you made money on it, or you had a loss, you lost money. When you're actually trading it in, what typically happens is it actually reduces the new vehicle's asset value, that amount that you can capitalize. We have to subtract off the gain or gain or loss of the asset that you got rid of. Check with your tax professional, make sure that's what they want you to do, but just know that's how we're going to be applying this one. So when we start thinking about actually moving all that into a journal entry, here's a little summary that I've put together to make it easy for you. First, purchase price. That's what we're going to debit. We need to know the trade-in value and we need to know what the loan was. The loan amount, we're actually going to come over here and subtract it later. But to be able to get the equity, we take I said this before, but I just want to tell you it again, the trade-in value, the $27,000, subtract out the full amount we owe on the loan, including interest, and that gives us the $9,186.49. Okay? You need to know that amount. Now that's not exactly what the asset value is because there's some other differences in the math, but the next thing you want to know is the $69,000. So that's where this $9,000 matters, is because you're taking the cost of it minus that $9,000 that they're giving you as value, and that is where you get your loan amount. Okay, so that's why that math matters. So then that's where we get the loan here. The asset is going to be what we got from QuickBooks. We're going to subtract out the depreciation that's here, and that's going to give us our value of the book value, okay? Based off the math difference between this and this, we get the 12,000. All right, so the 27,800 minus the book value gives you the 12,878.42. Let's put it into QuickBooks. Are you ready? It's many different pieces of the puzzle. First thing we want to go to is over here under List. Go to your chart of accounts. This is where we're going to set up all of your different assets and your loans. You're going to go down to the bottom. I'll take my face off so you can see it well. Go down to the bottom to Account. Click New if you don't know how to add it. To add your asset, you're going to do a fixed asset. Click Continue and enter the data. I've already set it up, so I'm going to save a little time, so I'll show you how to do that. And then if you need to set up a loan, if it's a long-term loan, meaning it's going to be longer, if you do loan here, it typically does like a line of credit or loan which is current. What you want is long-term, so you're going to drop it down and pick this one when you go to set up your loan, okay? So I've already set them up just to save us a little time. You are going to see a few things. One, you're going to want to set up your forward. I personally like to do original cost separate so that it gives me all the details I want. You'll notice with the RAM, we can see the 14,000, which matched our number, and the 24,921.58 and the 10,000. So the 24 minus 10 gives us 19. If you make these sub accounts, it'll do the math for you. Depreciation is a contra account, so it's a negative number. It's reducing your overall asset. That's why it becomes 14. And then down here, you'll see our loans are already set up. I set up a new loan for the forward, which we'll be doing in a little bit. When I do the journal entry, we'll be adding it. And I set up the loan for the RAM here to reduce it, okay? So the old vehicle, the loan, if you have one, and the asset value should already be in your QuickBooks. What we're going to do is take those out and add in the new purchase. To do that, we're going to do a journal entry. I rarely recommend them, but this is one of those cases that you could do it. So you're going to go under Company, Make General Journal Entry. Perfect. If yours says adjusting, you can take that off. If it doesn't say it, don't worry about it. We are going to do this transaction as of 5/25/25, but you're going to want to do it on the date of the purchase of the new asset. So we're going to start here. And remember, when we're looking at our depreciation, all right, so we're going to use this journal entry. I put it down here so you can easily see it. We're going to just start. I recommend you print it out and actually have it next to you. So we're going to start with the Ford, the new vehicle. We're going to go down, we're going to put under original cost because we're adding it there so we can have it as sub accounts. You don't have to do that. That's totally up to you. It's just something I personally like to do. We're going to add the asset as a debit. Next, we are going to add purchased Ford and the last digits of that VIN number, trade in RAM, and then if it has the VIN number as well. If you want to put in, I like to do on the first line because it'll add it to each one, you'll see. If you want to add the vendor which you spent or purchased the asset from, you can. All right, let's go ahead and go to the next one, which is the trade-in. We're going to skip. I want to come back to how we do the math difference on it, but we'll come back to that later on the trade-in of the Ford. We'll do it as the last part of the transaction. Next, we are going to go and do the new loan. So we'll go ahead and do loan for the Ford. Make sure that's set up. If it's not, you can add new directly from here inside the entry. Now, if you're not familiar with debits and credits, so because we're adding asset, we're debiting it, a loan is a credit balance, I'll actually add a link up above and down below where you can download a cheat sheet on how to do journal entries. I don't recommend them very often, but if you're gonna do them, let's do them right. So I'll give you a little quick cheat sheet that you can get more information about. So we're gonna go ahead and add the loan. That'll just show you debits and credits, kind of like a little T account that you can use. Next, we will do the RAM. So you're just looking at that little tracker and you're putting piece by piece in. So with the RAM, we're actually going to remove it. Now, if you go straight to the original main account and you don't use a sub account, it won't remove it properly. So make sure you're choosing the one you want. And because assets increase with a debit, we will go ahead and credit that for the amount of $24,921.58. We're just entering the data that we already did. We did all the upfront harder work when we were doing the math initially. Next, we are going to go ahead and do our depreciation for the RAM. And that's why you'll see it here, but I like to put it kind of at the end too, just to make it easy. Because depreciation increases with a credit, we will be debiting this one for the amount that we want to remove. Next, we will do the RAM loan. So first we added the new asset and the new asset loan. Now we're removing the old asset, just kind of putting it in that order. Makes it clean and easy. You gotta remove and don't worry if your math while you're adding it, it's like trying to put these numbers automatically in. You'll see numbers are popping them in and then I'm changing it. It's because it's trying to help me do my math all the time. See that? All right, so the next thing we need to do is interest expense. If you don't have one set up, I like to do interest expense even though it says it over here, just to make it even easier, okay? So now we have entered everything. We've added the new asset, both the asset itself and the loan. We've removed the old truck asset, the depreciation, and the loan. Added the interest expense because it was paid when it was purchased, the new asset was purchased. So the last line that we have is where that asset is. And typically when we're doing this, the way the assets work is you're buying and selling maybe one piece of equipment and you just have a gain or loss depending on how your money works. But in this example, we're actually reducing that new asset value because we mixed them all together. And that's why it might be smart, check with your tax professional, to not do necessarily a trade-in, which you'll know for in the future because you're probably watching this after the fact, but know that it might be smarter, just depends on the value that they're giving you as a trade-in versus just selling it. But if you separate them, you get the full value on the original asset. That is what my tax professional recommends, but you check and see with yours, okay? As I said, I'm not a tax professional. I can't give you advice, but I'm just giving you what I know. So then the last one is going to be that Ford truck. We're going to go back to the original and we're going to reduce it for the trade-in value. And this is going to be your math difference. I do recommend that you keep all your details. You can attach it here if you'd like. You're going to go ahead and click Save and Close. You can click OK. We're not going to worry about the tracking the fixed assets right now. We don't have, I have classes set up, but that's okay. Now we're gonna go and we're gonna look at what happened. You'll see you have your truck right here and you have the original and it's the difference. If you open it up, it's the purchase minus the trade-in value. So it's very clear that they're two different things. Then you have the RAM and it's zeroed out and all your accounts are zero. So what you're gonna wanna do with these is you're gonna wanna make them, you right click and make them inactive, or you can come down here and click Make Inactive and it will make them inactive. Now, what a lot of people think that means is then they're just deleted. If you actually click this little button down here where it says Include Inactive, everything you've ever made inactive will still show up. So we'll go ahead and right click. You just want to make sure you're getting rid of the ones that you'll no longer use. While you're in there, you can clean up other accounts as well. Now we're going to come down, we're going to look at the loans. The RAM loan is now zeroed out. And so we can make that one. You can either right click or go down below and make it inactive. And now we just have the correct loan of what we owe on the Ford itself. So we've removed the RAM completely and we've added the Ford details in. The value of the asset, no depreciation yet because we haven't started depreciating it, but we also have the loan. Now we can start paying the loan down as well. If you're looking for a depreciation video, we'll link it up above and down below. If you need the journal entries cheat sheet, check that out up above or down below as well. And let me know, did this help you? In the comments, I'd love to hear. If you're new here, don't forget to subscribe and give this video a thumbs up, please. It helps us reach more people. And if you're thinking, oh my gosh, these are the types of trainings that we include inside of Comms QuickBooks, check out our Customizing QuickBooks workshop. You can go up above or down below, we'll link it. And if you'd like to get these types of tricks in your inbox every single week, we also send them out to email. You can register to get those as well. Thank you for being here. I hope this video helped you. Go enter in your trade-in value. If you find that after watching this video, you're like, oh my goodness, I need to go back and rewatch it, do that. That's why I put it here for you. You can speed it up with the wheel or you can slow it down, take notes, start with getting all of the data you need because it will make the journal entry side of it so much easier. Thank you for being here. I look forward to seeing you inside my next video. Have a great day. Bye.